Welcome back to episode 476 of the Trading Justice Podcast. It is a pleasure of mine today to welcome a great friend of mine and a great friend of the podcast, Mr. Pete Thomas from Zaner Precious Metals. Pete, don't really need to give your introduction, as our entire community knows and loves the great Pete Thomas. Pete, how you doing today?
Well, I'm doing good. It's sort of like welcome to Dramamine trading. If you're
A little turbulence out there.
Oh yeah, if you're not getting seasick, you're not trading. I mean, this has been as radical as it gets, and we have more reasons than you could shake a stick at to have these markets as crazy as they are. I mean, seriously, Matt, you talk about China, the number one consumer of metals in the world, which is my basis, and China just turned in the worst employment numbers in recorded history for them. The numbers you get from China are no good, but we're fortunate
and they're
enough.
usually worse than what China reports too, a little bit historically.
Well, they've been harping on this. Well, we're going to have this V bottom off of COVID. And these numbers came out and they went, soon we're going to have the V bottom coming up.
At some point, we will have that V-shaped bottom in China.
Right.
That point maybe be in some distant future for some of that data coming out of China. And, Pete, you talk about the Dramamine for the turbulence of the market.
Absolutely.
Living on intraday charts right now. And if one day just kind of proves the volatility of the market it is today, for an hour there before the in pre-market activity, Dow's up 500 points, cash open, Dow's down 500. It's one of those moments in time. And Pete, obviously we talk a lot about a lot in the marketplace, but when we bring you onto the podcast, we are looking for some information regarding a certain area of the market. And Pete, your expertise is certainly within the metals and the mining space of the marketplace. And one of the things that our community at Trading Justice and Tap on Trading loves so much, Pete, is your takes on gold, silver, cobalt, palladium, platinum, copper. And what I want to do here is to get a broad update on some of the major metals out there: gold, silver, platinum, palladium, and copper, and really get your read on it, because we're seeing some downward movements in price here, and I want to start with gold here, Pete, because in an environment where we're dealing with lockdowns in China, we're dealing with geopolitical strife. I don't even want to say geopolitical strife. We're dealing with open war in Europe in 2022. Absolutely. We're dealing with an inflationary situation in the U.S. that reminds people of the 1970s and early 1980s, which is never a good thing, mind you. And so we're dealing with quite a bit in the wall of worry. And Pete, one of the questions that I have, one of the questions our community has, is why is gold performing the way it is as we're dealing with all of this strife in the world right now, from the lockdowns in China to the geopolitical situations in Europe to the inflationary concerns around the world? You'd think gold catches a bid in that environment, seeing a little bit of selling pressure here with the rest of the market. What's your read here in the gold market?
Well, it's a very simple thing, in that everyone's been home with COVID for a couple of years. They're all trading on their screens. Everybody's got the platform that they like, and we've never had quite the participation that we've had before. And a lot of the traders today are on margin. And you and I both know that, a lot of these guys are margined up to the hilt in their 401ks and, in their personal accounts. And all of a sudden we get hammered the way we've seen just recently. And the guys got margin calls. So what do? You sell everything to make that margin call. And gold has been probably the most solid. It was holding 1900 very well for a long time. And guys who held it just said, you know what, I got to make this call or they're going to blow me out of my Microsoft or whatever. And we saw a lot of people come into the market selling their precious metals. And it's and what you're asking is, hey, why did this happen? It's because the influences of the other markets on the people's accounts had to be leveled up. It's sort of like trading places, margin call, gentlemen, and that's what it was.
Well, Pete, there we do a show every day in our YouTube channel called the Halftime Report, and every
Okay,
day I analyze the broad markets technically. I analyze the
interesting.
news of the day. I analyze gold, silver. I analyze,
Right.
sometimes copper, but the majors, Bitcoin, oil, gold, silver. I analyze all of that from a technical fundamental perspective. And the
Right.
last couple of weeks, I've been looking at gold, saying, what in this environment. And I put a lot of emphasis on two styles of analysis for me. One, top-down approach to the market, right? Really kind of, determining what the S&P 500 is doing, and then creating your bias off that S&P 500, working into the sectors, the industry groups to see certain themes that are impacting in sectors versus industry groups, and then
Gotcha.
intermarket analysis as well, seeing the relationship between the dollar and gold and so on and so forth. And when you're
Okay.
talking about an environment where historically we're talking about concern in the market, usually gold catches a bid. When we usually talk about the market when fear grapples the market, gold
Yeah,
catches a bid. In an
absolutely.
environment where you see hyperinflationary situations, gold typically catches a bid over time.
Yep.
But
Yep.
in this environment, when we're dealing with all of the above, gold
Yeah.
hasn't been
Yeah.
able to catch a bid. And I've been saying for the last 2 weeks, Pete, I've been saying, listen, this is the one instrument that is a little confusing to me right now. I understand the downward pressure in the
Yep.
marketplace. I understand the bloodbath that is occurring in certain areas of the market that are tied to high beta tech, high beta growth type areas of the market. But gold taking it on the chin in this environment really kind of confused me a little bit
Yeah.
until, Pete, last night. I'm sitting there and I was thinking about you last night, my friend.
Yeah.
And last night I'm thinking about my good friend Pete Thomas. I'm thinking about all the conversations we've had in our history, Pete. And
Hmm.
I was thinking about a conversation that we had back right after the pandemic hit the
Right.
market. It's a couple years ago now. And when the pandemic hit, as you will remember and as you can see, gold took it on the chin a little bit initially,
Oh yeah.
right? And I remember asking you a question, Pete, about why this is occurring, because again, it was very similar to what we're seeing here today. Gold coming down on some negative economic analysis, gold coming down on inflationary going up, gold coming down as fear builds in the market. Again, gold usually holds support, finds a foundation. And then I remember Pete talking to me about margin calls in the early pandemic, talking about how
Absolutely.
you
Yeah.
got to liquidate those positive type positions to pay down some of the margin calls. And we're dealing with a lot of the same type of volatility today with maybe not as many concerns, but some increasingly concerning analysis coming out of the market. Gold coming down to offset some of the losses in other areas of the
Yep.
markets. Finally, Pete, last night at about 11 o'clock, again, I was thinking about you at 11 o'clock last
Yeah.
night, Pete. Finally, I was like, that makes sense to me. And so
Uh-huh.
when you're coming on
And
the podcast today saying the same thing, it makes sense to me.
yeah.
But my next question is, after that occurred, Pete, and it did not take long, gold found a
No.
really good floor and it pounded the ceiling and
Yeah.
saw really good rapid price appreciation for the next 3-4 months. What's your read here? Do you have a sense that as the market stabilizes a little bit, when it does stabilize a little bit, people's margin starts to maybe contract a little? Does gold catch a bid in that environment?
Well, let's even wax a little further back
Yeah.
in that same conversation. If you remember, you said to me, what's going on with copper? Why, copper's at 208, 209. Why are we here? And I said to you, Matt, copper's the biggest buy on the board.
You did.
And you said to me, you go, why do you say that? And I gave you all the reasons
It was
why, what
tanking.
mining was going on, what consumption was going on,
Yep.
where smelting was at. And you said, okay, I'm going to overlay that on the charts. And you said to me, Pete, this has been the biggest buy I've seen ever. And it was at 208 then.
It's
And
208.
you and I watched it go to $5 from there.
Mhm.
So what happens is when you get into these spike downs of people evening up portfolios in order to bring liquidity in, they're tremendous buying opportunities. Is this the buying opportunity now, man? I don't know. But I'll tell you what, it's the same scenario that you and I talked about years ago that all of your followers got in on, because I got a lot of notes.
You took orders, bud.
Yeah, we nailed it. You know,
I believe my mother called you a couple times in that environment.
Yeah, I know. Yeah. So yeah, so that's the thing. I think it's the same scenario we had before, and it's the same evening up of portfolios to meet calls. And the question becomes, if gold can hold 1785, let's say, and it just dips through and then holds and then comes back, you know, then it could go back through 2000 with the potential there. But right now we're still seeing some selling, and the question is, when is China going to come out of COVID? Right now we have 65 million people locked in their homes, and all of the plants, all of the workspace in Singapore closed down. That's a whole lot of consumers locked in their houses. And you know, the World Gold Council, which is really a good source for metal numbers, said that, you know, that these are the most people they've seen in years shutting down mines, shutting down production, shutting down refineries, because there just aren't people to run them. And you have to remember, when you and I talk metals, 61% of all the copper in the world goes to China. Aluminum, iron, all the base metals, they all go to China. And right now it's all shut down. So we're in kind of this double whammy where we have this monstrous inflation, and then we have China shutting down its consumption side. So this is a tornado we're in. So
as all of this is playing out, obviously the volatility picks up,
right,
prices come down.
Yep.
But and I totally respect all the macro analysis that we're dealing with right now, from inflation to the shutdowns in China to the wars, to the war happening in Europe. I have 100% respect for everything that is occurring right now, but I still look at this environment, specifically in the metals, and I see it as an opportunity, Pete. I see it as an opportunity. And I remember that conversation you and I had very, very well, as I basically replayed that conversation in my head for the last 12 hours, the one we had after the pandemic started. And I remember talking about gold and understanding how margin was impacting the analysis, copper, the same thing. Some of the most difficult things in trading and investing to do is to have a clear eye on a potential opportunity and to push that buy button in the face of some true market volatility. And that's very difficult to do. Obviously, I'd like to see a turnaround story from a technical perspective, but my eyes are very keenly on copper, on gold, and specifically on gold. It makes a lot of sense to me right now with the current volatility of the market that some of these big time players, hedge funds, institutions, liquidating some positive ETFs positions to pay down some negative positions. That makes sense to me. But once again, Pete, it didn't take months to years for us to figure that one out. Last time it was weeks. It was weeks. And so we're starting to work into those lower price levels where we could see these support levels build.
Hey guys, we were at $30. We're now at 21 in silver. You tell me. I mean, you know, we're getting into levels that really look attractive. But you know, as far as gold goes, there's a lot going on all around it too. If, for example, Peru is having the greatest rains it's ever had. A lot of the mines there that our people buy from are shut down. I mean, it's just a disaster. Colombia just changed its export rulings, and they're trying to get their paperwork done. Dubai just changed their entire overstructure as far as gold that can be accepted into the country. So there's a lot of things going on which are putting pressure all around, from Central and South America to the Middle East to the current war in the Ukraine. They're all putting pressure on gold. We're seeing a lot of it being sold. I know a lot of your people are wondering, you know, for the last 33 months, Russia has been a net buyer of gold,
Mhm.
anywhere from 11 to 33 tons a month, never stopped. And they just continued palms in, buying, 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 never stopped. The question is, are we seeing some exports coming out of the central vaults from Russia to being sold in Hong Kong, which is generally a path that it can take now? I haven't seen it yet. So I guess the $1 billion a day that Putin is getting to selling his oil to the EU is supporting this war without a problem, because I haven't seen any metals pop up. Also, platinum and palladium, which they're one of the largest producers of, I haven't seen any of that coming in any great amounts out of Russia as well. So we're going to get into, just to address what you're saying here.
Mhm.
We're going they're pulling from reserves as well as from production. A lot of people are leaving to work, to be in the war, to be, are
Mhm.
called up. And so, production is dropping in Russia and actually in Siberia.
But we haven't seen them liquidate any of their buying behavior over the last few years to pay down, because there was some of that analysis out there, Pete, that Russia was going to have to liquidate a little bit. Kind of the same conversation we were having with institutions and hedge funds liquidating gold positions to pay down margin requirements in some of the more aggressive areas of the market, right? Russia on sanctions, economically, they've been damaged a little bit. They're still financing the war with the $1 billion that they're making from the sale of oil. But many other aspects of their economy are really struggling right now. Would Russia, one of the questions I had, would Russia start liquidating their mountains of gold that they've been accumulating over the last few years to offset some of those damages from a sanctions perspective? It's interesting to note that you have not seen that yet come across the board. And so that's fairly positive for gold, in my opinion.
Well, that's one of the things that we do at Zaner, because, we represent refiners, we represent recyclers, we see metal in Switzerland, we see metal in Europe, and we watch the flow. And the thing is that I have not seen any real large numbers coming out of there. So, generally when 4, 5, 10 tons rolls out of some country, everybody notices it. But we're not seeing anything coming out of there. So, I mean, Putin, was buying in the 13s and up at 18 and 19. He's not too concerned when you're talking about, hundreds of tons. So, to tell you, we're not seeing any panic selling from them yet. And it gets down to addressing the issue. If we're not seeing that big push, Matt, as all that metal coming to the market, is the market going to be able to stabilize here and come back the way it did the last time we talked about this?
And I do believe it will stabilize, Pete. I think we're going to be working into some very, very important support levels in the gold marketplace to where you could technically start seeing buyers start to come back simply from a technical value perspective, a price value perspective. And when you're looking at the wall of worry out there right now, from economic contraction through shutdowns in China and everything that impacts, to war in Europe, to inflation in the US and worldwide, that wall of worry is real, and this market lacks any significant catalyst to offset that. Well, in that environment, I like gold. I do.
Well, there's a lot of buoyancy in gold. I mean, let's look at it this way. In the last 20 years, the money supply has raised 1,672%. That's a little bit inflationary in my book.
They don't want to talk about how that has impacted the inflationary scale very much. They want to talk about supply chain crisis all day long, because that you know what that does, Pete? That blames China, that blames Asia, that blames net exporters, and that shifts all responsibility of how much money we have personally created in the US and how much money we created in the pandemic and how that has impacted inflation. Oh, let's not talk about that. It's all China, it's all the exporters, it's all supply chain, right?
And so, Putin's good to point your finger at too. Hey, he's working out well as a bad guy, that
is true. That is true. But when you're looking at gold here, Pete, I look at the combination of two technical levels. Number one, GDX, the major ETF that supports the gold analysis. It has a massive support level that we're working down into right around that $29 to $30 level. And Pete, over last October into November, this January, I remember sitting in the halftime report being like, this is a market order at 30 for gold. If we work into those levels again, this level is a massively important level of support. And I could definitely see a turnaround story happening around that $30 mark on GDX. And when you're looking at GDX, you're looking at gold here. Gold, as GDX works into that $30 range, you start working into gold into that 1800 range. And that coincides very nicely with the price levels that you're talking about in that 1760 to 1780 level as well. And so I do think it makes a lot of sense that we're seeing a lot of liquidation of gold relatable instruments in the face of margin calls. And obviously, as that occurs, gold comes down. But as we start working into those support levels, the liquidation starts to stop occurring because it's already has occurred.
It's already occurred,
right? And you start to find a foundation. So I'm keenly looking at gold at that 18, anywhere, honestly, between the 50 period moving average now and that bottom level around that 1760 level. Coincide that with GDX at a $30 makes a lot of sense here. Pete, let's move on and let's talk a little bit about some metals and mining out there. Gold, that safe haven, right? That gold, that precious metal.
That is the harbor. Yep.
Let's talk about the industrial metals here, silver, platinum, and palladium, all of them under some degree of significant pressure recently. A violation of silver at 22. We've seen about a 20% drop in price in silver over the course of the last few weeks. Platinum, so silver slash SI when you're looking at the silver's contract, palladium slash PA. I mean, after a recent breakout, the floor is just given out here. Now you're seeing a tremendous amount of volatility over the course of the last little bit here in palladium, and then you have slash PL, which is platinum, just kissing up against massive support at 900. Pete, I want to talk about them all in conjunction with one another, all metals and mining. But my question to you is, which one do you prefer from a supply demand worldwide view perspective? And then which one do you prefer from a technical perspective? I'd like to add on to that one.
Well, platinum, palladium, right now, Russia produces as a company called Nornickel. And Nornickel has been probably the largest producer of platinum palladium out of the Siberia region, and they control a massive amount of product coming out. And we watched palladium rally. This last rally, it rallied 11% to 2472. I mean, it has been incredibly strong. Because the minute they said we're not going to buy any metals from Russia, everybody went, where are we going to go?
Where are we going to get them?
Yeah, he said, these guys produce 40% of it, right? Yeah. So with the blockade in effect, I really like it. And the bottom line is that chip usage, it depends on palladium. It is one of the best electrical passage metals there is, next to silver and platinum, and its demand. Think about this: 82% of all the chips used in light vehicles, 82% use palladium. That's where the vast majority of it goes. So the question becomes, if things get better, and let me see, I do have the card sales numbers here somewhere. I'll dig them up for you, but the sales decreased by 13.3 million units, but it was better than before. So, 13.3 million units sold is not a bad number, considering there aren't chips out there in order to manufacture them. So I'm thinking that we're going to see an upturn in light vehicle sales because everybody's just repairing everything due to inflation and the price increase. If we see a little dip in the prices of cars, we're going to see an increase in purchases of trucks and light vehicles. And I think we'll see palladium get stronger and stronger and 2,500 to get taken out. So that's kind of my favorite right now, just due to the fact that there's massive shortages. And here's another one for you guys. There's 250 chips in a Javelin missile. How's that for just just to throw that one in,
Yeah, we've been shipping and building a lot of Javelin missiles lately.
Absolutely, man.
And I believe I just saw a $40 billion economic plan for Ukraine. I think there's a lot of Javelin missiles in that 40 billion economic plan as well.
England and a whole lot of other places are using
lots and lots of them, no doubt about that. Pete, you're talking about the combination of what people are doing with used cars, and they're not buying new vehicles. They're not even really buying used vehicles. They're repairing their old vehicle and stuff like that. Well, what that kind of leads into is, are we going to see peak inflation here? And as we see peak inflation, as that inflation scale comes down, does that buying interest start to move back up? Does the demand for new cars, used cars, start to build back up? And does that impact palladium and platinum specifically? Well, a couple data points that maybe add to that argument, Pete, would be used car sales. Used car sales recently has seen a downtick in inflation. And I remember about a year ago looking at the extreme uptick in inflation regarding used cars, talking about how that was a leading indicator for consumer purchasing in terms of used cars, and how that was a very concerning data point on how inflation was going to grow from here. Well, now you're starting to see a little bit of the opposite, and I don't want to call peak inflation because that's a fool's errand to call peak inflation, in my opinion. But do we start to see that argument build out over time by seeing used car sales come down a little bit, and then we get the CPI report tomorrow? That's going to obviously have a really big impact on the marketplace. And then the PPI report on Wednesday or on Thursday as well. And so a lot to be said in the near term regarding those inflationary conversations, used cars, all that. Regarding the one, I'm looking at here, obviously I like platinum here at that 900 level here, Pete. Okay. Really good support level at around 900. I'd like to see a little bit of theme emerge to help support that buying action. But I think you can say the exact same thing for about everything in the marketplace right now. Silver here I always have interest in silver. It's that metal and mining that I always like. I do have interest here, but I need to see a little bit more. Recent violation of 22, which was a very important support level for silver. Once that clips that level, I start to think you got value anywhere at support. That next support to me is right there in that $20 range here, Pete. I like that $20. The support's right there where the 200 weekly moving average is, which is typically a pretty decent buyer zone. $20 is a significant whole number. You do got support at 19, which is a massive support level.
Yeah, that's a huge number. Yeah.
So I think as we start working in, and again, a lot of volatility, a lot of negative price actions in all markets, but as veterans of the markets know, Pete, these downwards moves in price create opportunity over time. And so I look at this level at about 20, in that zone around 20, 19, 20, in that zone. I like silver in that zone from a fundamental perspective. What's your thought?
Well, I mean, the fundamentals, look at all of your followers and everybody that's been following me for the years know that I was a floor broker and filling orders back when silver went to $50. And, so I've traded it at 50 and I've traded it at 7, and when I see the market at 19, I go, yeah, that's pretty cheap. I mean, I just look at the overall picture, and now next year, the projection from the Silver Institute, they're looking at around 1 billion ounces to be produced. Last year was about 997 million metric tons.
So we're going to similar.
It's very, very close, maybe 5%, give or take.
Yeah.
But here's something interesting about COVID that I found interesting was the fact that sales of flatware, silverware is a big drawdown on base metals as far as silver goes. The use of silver in silverware was up 32% last year in
Really?
flatware. Yeah, everybody was sick, staying home, and they just said, we got the same silverware for 20 years. Let's just get something new, right?
Mm-hmm.
And it was a tremendous drawdown on supplies, and projections for industrial demand for 2022 are up 6%, which outstrips the 5%
Drawdown
production
on
increase
supply.
that we're looking
Yeah.
for. So Mexico is really doing a good job of expanding their silver mines. We're going to have to see what the end numbers are. I can't tell you. Recycling, we're looking at about a 4% increase in recovery of silver. So really, all the numbers are kind of balanced out, Matt. I mean, we're
Leads me
not
to
seeing anything
stabilization
unusual.
analysis, right?
Yeah,
Yeah, which typically when you're looking at something like that and you're not seeing a radical picture year over
right.
year,
Yep.
like it's hard for me to see that environment be like, oh, silver's just going to continue to tank all the way to $12.
Yeah, right.
You should see stabilization analysis occur. And when you're dealing with downward movements in price, I just typically take stabilization as a positive step in the buying opportunity. And so as it starts to work into these major support levels, I think silver needs to get on the radar. I do. I think silver needs to get on the radar, and I think gold needs to get on the radar as well.
Well, what's interesting is, we own the Tornado hedging platform and have had it for, a long, long time. And most of the bigger guys that hedge with us over at Zaner on Tornado. And we have seen now, according to the CME's numbers, their projection, that the bigger players hedging is up 5% this year. So we're seeing more and more people kind of sharing what you're saying, in that, we're seeing as much usage as we are production, and we kind of don't know where these prices are going to go. So some of the bigger players are coming in going, you know what? At 25, I want to be short silver against the product that I own or that I'm going to use, or the product that I have in my warehouse. And so we're seeing a big uptick in hedging, and it's a real tough call at this point for us to say, well, we're seeing a lot of people buying inventory, but they're also selling it, so they're beta neutral to market. So they don't have an opinion either, Matt, other than the fact that they're buying what they're going to use.
And that kind of matches my opinion here. It's a buy at support, sell at resistance scenario where, you basically say if supply and demand are relatively equal year over year, 3% here, 5% there, if they're relatively equal year over year, and the landscape hasn't changed that much, technically, when you're at the low price, you want to start the buying activity, because fundamentally, economically, behaviorally, nothing really has changed. Technically should follow that. And so you really, if silver was at 26.28 right now, I would say the opposite. I would say, okay, you might want to write covered calls here, might want to start liquidating a little bit, because again, that's what we're seeing in these neutral ranges. But for me, and gold is the safety play here for me.
Sure.
As gold is working into the low prices, as people are liquidating to offset margin counts, I just feel like gold's going to catch a bid in the back half of this year. And I think we could see a rally coming back up into that 2000 level. And
historically, Matt, when you have inflation like we have, gold will be strong. People will run into it because they don't know what to do. Do you want to buy a fixed CD or a T-bill at 0.2? And hope that it holds, or
it's the funniest
do you
thing.
want to get into some gold and hang on to it? And then traditionally, when the inflation stops, if it does start into recessionary tones, then you'll see people selling their gold in the recession. That's generally the cycle. The question becomes, are we going to become recessionary, or are we going to come out of this with rate increases?
Obviously, that's the entire conversation here in the market over the last month or so, really over the last 4 months or so, and a lot of hot takes everywhere, right? I mean, you can't go on CNBC without getting a hot take somewhere on the worst recession the U.S. is ever going to be faced with. And I've constantly said, Pete, in answering this question whenever it's been asked to me, I'm not there yet. I'm not there in predicting the recession. There is still a road to be traveled. We have to travel that road to see where we're going to go. And the simple reality is the people out there predicting one way or the other that everything's going to be sunny out there, everything's going to be dark out there. It's probably the truth is probably somewhere in between. And right now, what I personally feel, and I'd like to get your take on it as well, is I personally feel that the odds of a recession have certainly increased over the last 6 months. There's no doubt about that. Yeah. But I actually think a lot of the analysis that people are leading to recessionary talk actually is stagflationary talk. They just don't know how to put it into that language. I'm not sure we will see a technical textbook recession. I do feel we will go through something that certainly feels a lot like a recession, where you have more like stagflation, where you still grow economically, but you don't grow to offset the inflationary scale. And so you're not technically in a recession, you're in stagflation, because technically your GDP is still expanding, but it's not expanding at the same rate as inflation is expanding. I think that's more in the cards, which honestly, Pete, for me is a little bit scarier of an economic philosophy than even a recession is. Because I have a philosophy towards recessions, like rip the Band-Aid off, get it here, get it over with, let's go. Stagflation can knock out a decade's worth of price appreciation if you can't figure it out. Look at Japan in the 1980s through today. And so that I'm not there yet in terms of are we looking at a recession? Are we looking at a soft landing? Are we looking at stagflation? I honestly think depending on what form of analysis you're looking at, you can find the evidence to support a conclusion right now. And so it's just a matter of and I hate to say it, but I need more data. I need to see more data. I need to see, because I certainly expect the labor market to have an uptick here in unemployment over the course of the next 6 months. But does that uptick to the point of getting even above 4 or 5%? Like right now, you're at a traditional maximized employment argument with 3.6%. Anything between 3 and 4, you can make an argument that is max employment. Right now, inflation year over year is kissing up against 8, 9, 10%, depending on the month you're looking at. And so for me, the question is can the Fed navigate the rising interest rate environment to curtail inflation without sparking stagflation or recession? It's a tough hill. That's a tough hill to climb. Honestly, Pete, I'm glad I'm not the one making the decisions, but I'm not there yet with the, oh my goodness, we're going to get the big R word, recession. Like I just feel we still need a little bit of road to go down before it leads us to that. And the Fed has the ability to navigate a soft landing, Pete. I'm not confident in the Fed's ability, but I'm also not confident in the Fed typically. What about yourself?
Well, I think your analogy about stagflation is one of the best I've heard, and it really holds a great deal of validity in that, everybody's. I mean, the number came out today, 7.4%. They're talking about inflation. Mm-hmm. It's not 7.4% when you go to the grocery store.
It's not 7.4 at any point.
Yeah, it really isn't. But I mean, it's a nice number to wave at the people, but everybody knows differently. The question becomes with stagflation is inflation going to strip away the gains of the growth, which I think is a good analogy of yours. I look at my numbers that I deal with every day, like we were just talking about, whereas production and demand are pretty close to one another. And when you look, and really pretty much across the board, it's the same way, Matt. I mean, we're seeing demand for gold in production, demand for copper in production, the use of, we're going to see a pretty good increase in demand for copper because of the EV revolution. Your average car uses 10 to 30 pounds of copper. An electric vehicle uses 90 to 110 pounds. So we're going to see a big uptick in coppers here soon. But other than that, demand is pretty much sideways. So your stagflation, unfortunately, holds water. And I wish it didn't, but
listen, I hope it doesn't either. Pete.
Yeah.
I do. I like
Yeah.
nobody in the history of mankind should ever cheer on stagflation.
Right.
Recessions can reset the economic scale. Recessions can reset a massive, valuation question when you have overinflated markets that need to get reset to better, more true fundamental valuations to a certain extent. Because we all know at the top of the market, things get out of whack, and at the bottom of the market, things get out of whack as well. It's when the emotion really kicks into the market. Stagflation is the worst of the three.
Yeah.
Like by far, it's the worst of
Really
the three.
is.
But again, the question is, can the Fed navigate that? I'm dubious, but can the Fed navigate to the point where they do not contract growth enough to spark that recession, but also not navigate us into a stagflationary environment? It's a tough hill. And again, I'll say this: I'm glad I'm not the one making the decisions, but I would also be the guy that didn't make the decisions that led us to this point in the first place either. And so there is that criticism there. I wish I had a better answer for it. I think we'll know a lot more about that question in 3 to 4 months from now. Right now, I'm focused on a lot of the floor in the market, and especially here in the commodity space. Do we get a buying opportunity at $20, for example? Do we get a buying opportunity at $1,800 in gold? Do we get that buying opportunity on platinum at $900? Do these support levels hold? Because regardless if we go through stagflation, recession, I'll tell you, in my opinion, owning equity would be worse than owning gold in those environments.
One of the things that you can do in those is you can just step off the train track and not get hit by the train and just take delivery and buy some coins or buy some ingots,
Not a bad idea at all.
I mean, so I end up buying some silver ingots at $20 and throw them in my safety deposit box, and it runs at 23, 24. And
let me ask you a question on that, Pete.
Yeah.
Going back to the early pandemic, because the price action we are seeing does remind me of pandemic price action in all markets. It does.
Yep.
I remember, having all these conversations with you in the pandemic regarding commodities, Pete. And I remember the conversation we had following the one where we were talking about margin calls.
Right.
You were complaining about one specific thing, Pete. You could not get physical metal to deliver physical metal to the amount of demand you were getting on physical gold, silver, platinum, you name it, right?
Yeah.
Right now we're dealing with that initial downward movement in price that was similar to the pandemic. Pete, how's your supplies look these days? Because I feel like you're going to get a few calls over the next 3 months.
Well, I'll tell you what, I was just invited to the American Numismatic Show it's here in Chicago in Rosemont at the Rosemont Convention Center. It's a gigantic center. And they had 400 tables there of people dealing metals. And a lot of them, of course, are our clients. And it was just so nice to see everyone. But as I walked from table to table to see our friends and see what was going on, every dealer, and they all kind of pretty much know me, would look at me and go, "Pete, you got any gold?" And I'd say, "What do you mean?" They go, "We're running out of gold coins. You got any gold coins?" And I was like, "Oh, I'm sure I can dig some up for you here." I mean, but there was by Sunday, almost everybody was out of gold coins. People were coming to the biggest gold show there is, and they didn't care. They were just throwing cash down on the table. It was pretty amazing to see. So what you're saying, I have seen to be true. We are seeing a real buying wave going on, and kind of quietly. You don't hear a lot about it. I think this is
it's because the market's going down, Pete.
Yeah.
This is the combination I see all the time. When the fear grapples the market, everybody just wants to sell and leave the world for the next couple weeks and then come back when times are better. But when they come back to the market and times are better, they make that call to Pete Thomas to pick up the silver. Well, guess what? My mom already called Pete. And so my mom already bought all the silver.
Yeah, right.
So you need to get in front of my mother type scenario. But again, my mother representing everybody else.
Right.
If you see the market the way I'm seeing silver right now in this environment, and gold is specifically, these two instruments, both downward movements in price, and both can continue to come down. Like
Sure,
Pete,
absolutely.
you were talking about gold at 1760. I'm
Yep,
talking about silver at 20, right? We could
right.
both of us can still see 5-10% more downward movement in price
Sure,
here,
absolutely.
but it wouldn't also surprise us to see support start to build now either. And so we expect more downward movement in price. You never know if you're going to get what you expect, though. You got to be prepared. My
Oh,
point
yeah,
is this, Pete. If you see the downward movement in price similar to what we saw in the early pandemic, and if you know the next 3 to 6 months post-pandemic was all price appreciation due to lack of supply because everybody had already purchased all the coins, and
right.
and people were having a difficulty, and that additional demand just drove those up. I think you got to get prepared for those moments and not try to chase those moments when they happen.
And if you remember too, when I was talking with you the last time, we had a new director of the U.S. Mint, and he and I had sat down about 3 days after he had been confirmed by the Congress, and we were chatting about some of the new coins that he wanted to put out, and he knows I'd produced some coins over the years, and we talked for a while, and I said to him, I said, I think you better be prepared for some shortages in silver. I think things could get a little dry because I'm having a hard time. Peru is not shipping, and some other place, Mexico, was not cut. And I said, I think you should start looking very hard at the idea that things are going to get a little tight, and maybe start reaching out. He said, no, we have plenty of product on hand. Now, he had just stepped into the job. He didn't really have a feel for what was coming in. And very shortly after that, he sent me a notice, and it would said, yeah, we're running low on silver right now. So,
well, I
it
get
was
it
just,
though.
yeah,
I get it, Pete, because
yeah,
when you step into the job and you're looking, okay, we have typically this much supply and
right.
typically we have this much demand,
Demand, right.
and then you bring somebody like you or me in and we're like, yeah, but you have these environments coming down the pike in about 3 to 4 weeks from now, and you better get ready for those right now, because if you're just looking at your supply and demand numbers as of today, those could radically change if we see certain conditions met in the marketplace.
Yeah, it's well put.
That's what they're not ready for.
Right.
But what you
you know
want.
what? And the only one I ever think who really had a good handle on it from the U.S. Mint was Chairman Moy. I could pick up the phone and call Moy, and he was terrific, just a gentleman. And he would, I would say, get a little dry out here, Pete. And he'd be like, yeah, okay, and he would listen,
Yeah.
but really smart guy. And the thing is that as far as production of the 1 ounce ingot, the 1 ounce American Eagle, great coin, beautiful coin. As you know, they get scooped up pretty quickly now.
Yeah, they
Right
do.
now we're seeing pretty good demand in the $20 area where people are saying, you know what? I mean, I think do I want to be holding paper in this inflationary thing, or do I want to have something sitting in metal? And we're seeing an increase on the metal side.
Well, and honestly, you never know what the future holds, but in this environment, I think a $20 handle on silver makes a lot of sense.
Yeah, and the question now becomes, when you and I were screaming at your viewers to get into copper at $2, and then it went to 3, and everybody's like, "Oh, we made a fortune." We're like, "No, this thing is just warming up."
Not yet. You haven't made nothing yet.
Yeah, I mean,
and let's end on that one here, Pete. It's been
yeah.
just a fantastic conversation. Thank you so much for being such an amazing guest to our community for so long. What about copper here, Pete? Some of your best calls you've made in the podcast have been on things like copper, cobalt, platinum, palladium. Like
you and I were screaming at people to buy cobalt, and went up 300%.
You were screaming, I was cheerleading, but I'll take it. What about copper here as we work into that very important 4 handle here, Pete?
Well, we're seeing some very interesting numbers. I mean, copper consumption last month was 504,000 metric tons, and this month projections are 484,000 metric tons. So we're seeing demand dropped, which quite frankly, it's COVID. You know, you could, I
Yeah.
mean, I could
Lockdowns, Chinese lockdowns.
Yeah, but it's the lockdown. So I think it's China right now, and we just don't know how much impact it's going to have. But I will tell you, as being a physical, having miners and worked with, you know, I spoke at a just 3 months ago at the London mining conference, and then was in Cambridge there, and learned a lot from the European miners. And basically what they're saying is, when you flip the switch for that conveyor belt to come on and bring that copper ore out, or you're running those big diggers, they don't go on in a day. It takes 1 or 2 weeks of maintenance, and then you got to get the product out, and then the assays have to come in. So, I mean, we could see a 2 to 3 month gap where they're going into reserves, which I think, Matt, is very important to think about, because reserves are dropping and dropping and dropping, even though consumption numbers are going down. What's going to happen is there's going to be a gap in between.
That just means they're not producing very much at all then.
Exactly right.
Yeah.
And if they're not producing and they're taking from reserves, there's going to be a pop here. The question is going to be,
there's going to be a V shape if that's the case going on.
Yep, and that's what China's talking about.
Okay, so let me ask you a question on China then.
Yeah.
So it seems like most of the world has embraced living with COVID to a certain extent, with their economy reopenings, and like, for example, in the US, we're not dealing with lockdowns and shutdowns and mass mandates
and things, sure,
right? But China is extremely committed to zero COVID policy.
Yes.
And probably one of the most conservative countries in the world right now in terms of how they are handling COVID.
Okay.
And so these lockdowns, whereas in most of the Western economies around the world, we're seeing economic reopenings, dealing with the pandemic and so on, and trying to mitigate the damage as best they can or as best they see fit. China is still extremely committed to that zero COVID policy, whereas when they see any cases come out, they lock everything down, right?
Yeah. So, it's a totally singularity in and of itself.
In knowing the importance that China's lockdowns represents to economy reopening themes around the world, how much concern does China's zero COVID policy give you on some of this?
Well, it gives me a lot of concern, because look at they create so much of the product that we need. Of course, we still haven't figured out how to offload boats yet. They're still floating around.
They're still in the Pacific somewhere.
Yeah, that's just a little difficult. It wasn't before, but now for some reason,
by the way,
we can't do it.
That's not due to Chinese regulations. That's U.S. regulations on that one.
No comment. I got to say.
Yeah, I know your comments.
But I mean, look, here, let's talk about a quick yin and yang before we leave.
Yeah.
I'm Danish, and Denmark said, we want everybody out on their bikes, no mask, everybody out. If you're going to get sick, and do it in a hurry. Okay. We want to get this thing over with. We understand it. And what happened? In 6 months, they were at COVID zero. Everybody had gotten it. Everybody had it, and they were all doing what they had to do. And when you went to Denmark and people were in their bicycles and the shops were open and everything was going on, you were like, whoa, who's got this right? And
we in the US, we looked at some of what those Scandinavian countries were doing with their more free living type COVID policy. And we're like, wait a second, you guys aren't wearing a mask?
Yeah.
Right. Like we just didn't understand it. And but China's taken the exact polar opposite approach.
Yeah.
Right.
Yeah. Like I said, it's a perfect yin and yang. As to why, the best explanation I heard, Matt, was that it's political.
It doesn't make sense right now, 2 years into the pandemic with vaccines everywhere, to have to shut down Shanghai. Like, that doesn't make sense to me.
65 million people locked down, but from what I understand, their COVID vaccine isn't as good as our COVID vaccine.
Oh, they could buy Pfizer's.
Oh, no. The people at the top would lose face, buddy.
Oh, I know what
Lose
you're
face.
saying. I know what you're
Yeah.
saying there. It's got to be branded Chinese.
Yep.
I get it. Made
Oh, yeah.
made in
So
China.
that's
Yeah.
was the best explanation I heard, and you hit it right on the head. And that was, if it's not Chinese, it's no good. We have to use our stuff, and it's not working for them. And they aren't going to bring in the American vaccine, and so they're going to continue to have this problem. And welding people into their apartments is not how you get rid of this.
Not an answer.
Ah,
It's not an answer. Lockdowns isn't necessary, especially welding people into their apartments. Probably not the answer there.
yeah, just on
Pete,
a hunch, right?
thank you so much
Oh, yeah.
for coming on the podcast here today.
Thank
I
you for
really
having me.
appreciate your thoughts and your wisdom. Our entire community, they love and appreciate you so much, Pete. They're going to be excited as a pig, and you know what, to listen to this podcast.
Well,
and I'll give you final thoughts here, Pete, as we turn out the 476th episode of the Trading
you
Justice
guys
podcast.
have just been amazing. And
Well, I think you've been on like 10 of them. So.
Oh, yeah. I mean, but the thing is that you allow your viewers to get real clear and concise information from people that have a pretty good handle on things.
Mm-hmm.
And I believe that it's just always a pleasure to come on. And guys, by the way, I got to give myself a quick plug, ZanerPreciousMetals.com. We do have product available. Anything that you want, we can get for you, whether it's a coin, bullion, bar. So, when the time comes and you decide to go, just get on there, type in what you need. We generally are about 3 to 5 days out right now, man.
You know, one thing I love about Zaner, and I've known you guys for 17 years now, 15, 17 years now, but it's number one, the trust I have in Zaner's, and I've seen you guys work for over a decade now, and the treatment you give your community and your customers, and the effort you put in for them. I've seen firsthand multiple different times. Number one, love the fact that you're a full stop shop there. Whatever they need, you can produce, and not only from a delivery perspective, but help store as well. And from a creative perspective, I've seen you take very, very unique and different and crazy situations, and all of them and above, and figure out a solution for your clients. So
that's what we're there for.
I can't.
But your clients are crazy. Your listeners are crazy.
Oh, they listen to me,
I
bro.
saw you on Matt Justice, and they send me a check. They just find it out. Here you go. We send you a check. I'm like, okay.
They know the importance of the gold analysis. They know the importance of when we bring Pete onto the podcast, and so on and so forth. But Pete, thank you so much for coming on the pod, and thank you for your friendship for many years now. Pete. Until next time, you've been listening to the Trading Justice podcast, episode 476 with the great Pete Thomas from Zaner's Precious Metals. We are in the books, and if you like the pod, make sure to give it a nice little 5-star review on iTunes and help us out. Help us compete with the big dogs of Apple iTunes out there.
Absolutely.
So,
life always feels good, right?
It certainly does. Pete, thank you so much, my friend.
All right, my friend. Talk to you soon.